Farmland is a little different than rental homes or commercial or multifamily, but they can be similar in the same way. So you're buying a piece of real estate, you're planting a crop. When that crop is harvested, the profit from that crop is what your return is on that piece of property, right?
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 331. One of the truths that we rely on as residential real estate investors is that everyone needs a place to live. A similar, yet even more powerful truth can be claimed about the investing strategy that we will be discussing today. That truth is that everyone needs to eat. Where does the food we eat come from? Farms, of course. So what are the opportunities and strategies we should know to successfully invest in farmland? My guest today, Brandon Silveira, is a fourth-generation farmer and CEO of FarmFundr.com, a crowdfunding portal giving investors access to fractional ownership in high-profit potential farmland. Brandon, welcome to the show.
Howdy, thanks for having me.
What a fascinating topic, one that we have not discussed on the show before. Tell us a little bit about your background and how you ended up in this space.
Kind of born and raised around farming. Family were farmers, still are farmers, and then went to college, got an agricultural degree, and came back and started working around the farming industry. And like most people born and raised in this environment, it's in your blood, and you decide that's what you're going to do for the rest of your life.
Where are you out of, by the way?
We're out of Hanford, California. So right dead center of California, the nearest large town would be Fresno.
You know farming, you understand farming, grew up inside of it. And now you've kind of taken that knowledge and started FarmFundr.com. Tell us about that. What are the opportunities that you see in investing in farmland? And why did you start FarmFundr?
Farming it's a really cool asset, right? It's different than different types of real estate assets. You know, quite a few years ago, we started to see a lot of larger institutional investors come in and start buying up farmland. And there's a lot of people that want to invest in farmland, but don't have the institutional type money to buy a farm for $10 million and buy the equipment for $3 million. And there's a lot of farmers out there that would like to expand their ranches and need the capital. So there was this little niche with investors that wanted to put in smaller amounts of capital and farmers that wanted to expand their farm. And we kind of found this little just in between the institutionals, but not quite a publicly traded REIT, right? Where you're buying a fraction or a share of something. So FarmFundr was born.
Take us through the value proposition of investing in farmland. Like, what does an investor need to consider? And what's the motivating factor for investing in farmland in the first place?
Farmland is a little different than rental homes or commercial or multifamily, but they can be similar in the same way. So you're buying a piece of real estate, you're planting a crop. When that crop is harvested, the profit from that crop is what your return is on that piece of property, right? So, the value in that is that there can be pretty large swings in demand for some of these crops, as you see population growth and less farmable land in the United States and other places. So we've really seen an increase in value of farmland and the commodities that are grown on this farmland. So farming is usually not correlated with other real estate assets, and they're not usually correlated with the stock market, things of that sort. So it's a good, steady, safe place historically to invest in.
An investor who wants to invest in farmland, where do they start? What do they look at? Are they just going out and talking to farmers and buying up farms? I mean, how do you typically get started investing in farmland?
So if you want to get started investing in farmland, you have to look at how much money you want to throw at it and how much involvement you want, right? So most people have other jobs and other things that they have to do, so they're not going to be a full-time farmer, right? So you need to find an avenue to manage this investment and the best way for you. There are a couple of REITs out there that you can just buy shares. You can invest a large portion of capital to farms, buy your own farm, hire a farmer in that area to farm it. Or like we're offering fractional ownership in a farm. So that's the basic way you can do it. There's really only a few options. Anyone who's investing in farmland should look at the history. What is that farm going to do, and how long will it be productive, and what's the future look like for that commodity that's going to be grown on that property. Those basic things is where you should start.
When you're investing in farmland, what is the timeline and what kind of returns could you typically expect?
The timeline is long-term. Any investor who wants to invest in farmland should hold on to it for at least a decade, even longer is the best way to invest. So unlike commercial or multifamily, things of that sort, you're not getting a payment every 30 days, right? Rent's not due every 30 days. So we're harvesting a crop once a year. So you harvest that crop once a year, and then it could take 6 months to sell that crop, depending on the crop. It could take a year to sell that crop, just depending on the market and whatnot. So slow and steady wins the race here, right? You've got to be patient. You have to realize that a lot of cash is going out, but then when you sell the crop, it's like getting all your monthly rent all at one time at the end of the year, right? That's how I would compare it to farmland.
And whose money is at risk? You say a lot of money is going out, and then you're harvesting your cash crop toward the end of the process, which could be a year to a year and a half. But whose money is at risk? I mean, if you're investing in farmland, are you just at risk for the farmland you've invested in? Are you also partnering with the farmer as well and their expenses along the way?
Mostly what we do is we raise the funds for a farm and then hire a farm manager to manage that farm for the investors. So they get to reap the benefits of the market swings when they go up, but they also have the risk if the market goes down. We do this because we get a better return on investment. It's possible for us to lease the land back to a farmer at a structured rent at a lower percentage. We hedge the risk of commodity prices going up and down, but we also lose that benefit of the prices going up. And with what we're seeing in commodities and food needs, in the world today, we really feel like investors are in a better position if they get to reap the benefits from the increased price of the commodities themselves. So the investor's money is at risk. Anyone who invests, their money is at risk. You are at risk of the inputs that you put into the farm, but we also hedge that risk with insurance and different things. So it's quite rare that you would have an investment into a growing crop, and lose money on that investment.
And what kind of return would an investor expect if they're investing in farmland?
We like to structure our investment returns on a long-term basis at 10% or above. That's what we're hoping for with appreciation of the land. As far as a yearly cash yield, very crop dependent. We also want to structure that above 5%. We try and get stuff in the 8s and 9s. Like any investment, the more popular they become, some of these returns get driven down, but we feel there's a lot of opportunity out there to get some good returns.
What is the state of farming and farmland right now? I do have some concern just because you hear there's less and less farmers, you have climate change issues. What's your perspective on that, being a farmer yourself?
Yeah, we do have issues. There may be less and less farmers, but the farmers that are farming are ambitious. The age of the farmer keeps dropping a little bit more as the newer generation comes up. And, farmers are ambitious and they're smart. And I'm less worried about the farmer. I'm a little worried about climate change in certain areas. But in general, farming is stronger now than it ever has been. And I feel like in the next, 30 years, as the population grows and, the middle class grows around the world, our food demand it needs to double. It needs to double in 30 years. So demand is going to be extremely high. We're already seeing it now. So, I feel like food production, when there's a recession or depression, people still need to eat. And when times are good, people love to eat. There's just no way of getting around it. It is a necessity of life. And in my personal opinion, it's one of the most rewarding and important investments to make.
What do you see then if the demand is going to double and you see that the production needs to double? What is the future of farming and where is the future of farming?
I don't think owning land, fertile farmland, will ever be a bad investment. It's going to be useful for the rest of our lives and beyond. I do see a lot of changes. I see a lot of technology coming into farming. There's some interesting stuff going on with, fresh greens, with vertical farming, things of that sort. They're placing buildings next to large populated areas, and they're able to grow lettuce and things of that sort at a very fast pace with little water and no soil. Just super interesting. But, there's a lot of things that cannot be grown in a greenhouse or grown in that type of a situation. So I see greenhouses and things of that sort becoming more and more popular because we can control the environment. When we control the environment, we can increase production. But there's a lot of things, for example, avocados, right? I mean, you're not going to grow an avocado in a greenhouse. They're going to be grown out in fertile land with a specific climate. So, these investments are going to be very strong for a long time.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Take us through the investment process, and you can bring FarmFundr into the mix or just a typical farm investment. Take us through the process from identifying the property, negotiating, acquiring, all the way through to profiting. What is that process? And give us a specific example of how you go through that.
We'll look at which commodity do we want to grow? Where do we think the opportunity is? Let's say we want to put pistachios into our portfolio. We'll look at ground suitable to plant pistachios or for pistachios that are already producing. We'll decide what purchase price is the best entry to get into that particular commodity. We'll buy the land through an LLC, and the investors will own a portion of that LLC and own the land. It's as simple as that. When we harvest that crop every year, the amount that you invested in that LLC will be the amount that you get back, right? As far as when we sell the crop, your percentage of the profit will equal your percentage, just like any other corporation, things of that sort.
So it sounds like you identify the crop, then you go and identify the land where you can plant that crop.
Yeah, we'll look at citrus, row crops, nuts, vineyards. We've been doing a lot of studies on some vineyards with the wine market. We're looking at all agriculture. We've even looked at grazing land and things of that sort. We haven't made any purchases with that yet, but we look at where the demand is coming, what's going to happen as far as prices we think in the next few years, and what we think is the best investment.
Talk about FarmFundr. Why did you start FarmFundr? Being a farmer, how did you come to understand the power of putting together a fund or a crowdfunding platform to raise money?
FarmFundr came out of need and I think just an opportunity. There's a lot of different things that can happen to a farmer. For example, a lot of times a family farm will be farmed by, say, the son, and the parents leave the farm to all the siblings, and he has to buy out other siblings that are not involved with the farm. He has to pay estate taxes. And, we saw this as an opportunity to get silent investors into farmland where they can, reap the benefits of a farm with a farmer that really knows that farm because he's been farming it his whole life. And they don't have to sell a portion of their farm to, strangers to pay off other family members or pay off taxes. So, we wanted to have the opportunity for farmers to have this capital available to keep farming their families and know that they have a well-managed farm and they have an exit strategy in 10 years. So just FarmFundr came from the need as, we're going to see the majority of farmland change hands, probably $1 trillion in farmland change hands in the next 10 to 15 years. So as that happens, we want investors to have the opportunity to pair up with farmers that know what they're doing and get a good return on their investment.
It does sound like you're providing this service to help independent farmers stay independent without having to sell their land to like the larger corporations and institutions. Am I hearing that in what you're saying?
That's a big part of why we started FarmFundr, yes. We'll pair up with farmers. We'll also buy ranches 100% with investor funds and then manage those ranches for the investors. It really just depends on what the opportunity is. But we want family farms to be family farms forever, right? I mean, that's the goal.
I see farming as like the sacred profession that most people don't ever come in contact with. We know our food is there in the grocery store, but we have no clue how it gets there. What do you want our listeners to understand about farming and what they should consider when they're considering actually investing in FarmFundr?
I think investors should consider the overall benefits for society. I think they should consider, like I mentioned before, the slow and steady, the long-term investment that doesn't have a lot of fluctuation as far as highs and lows, but just seems to keep up with inflation and be a good investment over a long term. And also consider that the farmers that are managing these farms and are working these farms are a different type of person, right? They're just dedicated like you would never imagine. I mean, just 7 days a week out on these ranches, doing anything and everything to make sure that they get a good crop and provide safe, reliable food.
And how would our listeners get a hold of you or find out more about you and FarmFundr?
They can email us at info@farmfundr.com. And that's FarmFundr.com. Check out our website, go in there, sign up. They'll get emails on new farms that are available and what we have in the pipeline. And that's the best way to talk to us.
Why are big time investors like Bill Gates investing in farmland?
Inflation. I think a lot of people are worried about inflation. I think we printed an inordinate amount of money. I think that the prices that we are paying for farmland in another decade are going to seem extremely cheap because demand is never going to stop for food. And as inflation hits, farmland and commodities are an amazing hedge. And I think that's their driving force.
Fantastic. Well, Brandon, thank you so much for coming on the show and talking about investing in farmland and the dynamics of that and how you are pulling funds together to invest in farmland through FarmFundr. It's been a pleasure talking with you. Thank you so much for being here today.
I appreciate it.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.